All right, we need to talk about what's going on with Bitcoin because we are in a very strange moment. Some people are calling it the end of the beginning. But you know what? It also feels a lot like it could be the beginning of the end for the financial system we've all grown up with. So, what is really happening behind the curtain? Let's break it down. Okay, let's just rip the band aid off. The ETFs are here. Wall Street finally showed up to the party. Everything we said was going to happen happened. So, why does it feel so awful to be a Bitcoiner right now? The anxiety is real, and no, you are not crazy for feeling it. I mean, just look at this. The S&P 500 is knocking on the door of all-time highs. The Nasdaq is on an absolute tear. Even gold is having a moment. And Bitcoin, it's just stuck, going sideways. It's boring. And it's this complete disconnect that has everyone so freaked out. It just doesn't make sense. And it's not just you. This feeling is everywhere. You see a tweet like this from someone like Whale Panda, who's been around forever, and it just perfectly captures that collective sigh from the whole community. It just feels wrong. And then you see the on-chain data, and it seems to confirm all your worst fears. When guys like Charles Edwards point out that the big money flows are actually slowing down, well, it's easy to think the party's over before it even really got started. But is that the whole story? Oh, not even close. So what if this isn't about new buyers disappearing? What if the real story is about a historic, once-in-a-lifetime wave of old sellers? This brings us to the first massive piece of the puzzle, what we're calling Bitcoin's IPO moment. Think about it like this. Imagine a huge tech company, like Google or Facebook, finally going public. For the very first time, all the early employees and angel investors have a deep, liquid market to sell their shares into. They can finally cash in, take some profits, buy that house they've been dreaming of. That is what is happening to Bitcoin right now. The OGs are finally cashing out. And the numbers, they're absolutely staggering. In the last month alone, long-term holders, we're talking the old guard here, have sold over 400,000 Bitcoin. That is a biblical amount of sell pressure. In any other cycle, that would have completely nuked the price. But here's the crazy part. The price hasn't been nuked. Instead of an 80% crash like we've seen in the past, Bitcoin has just been chilling, consolidating at a relatively high price. The market is eating up this historic supply dump and just asking for more. That is the real headline here. So get this through your head because it's the most important part. This isn't weakness. This is a colossal feat of strength. It's the ultimate sign that Bitcoin has finally grown up. It's a mature asset now, one that can handle the kind of selling that used to cause apocalyptic drawdowns. But believe it or not, that's only half the story. Because while everybody is obsessing over Bitcoin's sideways chop, the actual plumbing of the traditional financial system is starting to make some very, very scary noises. The real story, the one that's about to change everything, has nothing to do with crypto. It's about the US dollar itself. Okay, stick with me here because this part's important. To get what's happening, you have to know about something called the reverse repo facility. The absolute easiest way to think about it is like a giant liquidity sponge. When the Fed went nuts and printed trillions of dollars, this sponge was there to soak up all the extra cash that was sloshing around, just to keep the system from breaking. Now this sponge filled up with over $2 trillion after all that money printing. Then, for the last year or so, the government has been slowly wringing it out, pulling that cash back into the market. But now, well, the sponge is pretty much bone dry. The Fed's little magic trick, their liquidity hack, is over. And hey, don't just take my word for it. This is Jerome Powell, the head of the Fed himself, basically announcing to the world that the emergency fund is gone. He's admitting their safety buffer is toast, and now any more tightening is going to start squeezing the actual cash that banks need to function day to day. And this is why that should terrify you. The last time bank reserves got this low was in late 2019. And what happened? The entire market seized up overnight, and the Fed had to hit the panic button and start printing money like crazy. We are staring at the exact same setup right now. History is not just rhyming, it's screaming. So, what happens when a country's money starts to break down? Well, the cracks don't just show up on some Fed balance sheet. They spill out into the real world. They fracture society itself until it feels like you're living in two completely different countries at the same time. And that breakdown seems to be happening along two different fault lines. The argument goes like this. One part of the country got completely wrecked when manufacturing jobs were shipped off to China. Now, a totally different disruptive force, the internet and specifically AI, is coming for the jobs of the other America, the white-collar, college-educated class. And you can see it in the data. Since AI really took off, those entry-level junior white-collar jobs have fallen off a cliff. Meanwhile, senior roles are actually growing. So AI isn't replacing everyone, it's just kicking out the bottom rung of the corporate ladder, leaving a whole generation of young people with no way to even get started. And the result of all this is widespread economic pain. Just look at this number. According to this data, less than 1% of the entire U.S. population lives in a part of the country that's actually seeing economic growth. For pretty much everyone else, it feels like things are going backward. And this kind of financial stress, it has a very real cost. You start seeing headlines about the government preparing for civil unrest. You see social tensions boiling over. It's a brutal reminder. When you break the money, you start to break the society that uses it. Okay, so let's put all these different crazy pieces together. You've got a maturing Bitcoin market on one side and a fiat system that's literally breaking on the other. What on earth does that mean for the future? So let's just lay it all out. On one hand, you have the Bitcoin market showing frankly unprecedented strength, just shrugging off record amounts of selling. On the other hand, you have a fiat system where the emergency liquidity is gone, and the Fed chairman himself is basically admitting they have a huge problem, a problem they can only solve in one way. And that one way is the only playbook they've ever had. Step 1, stop the tightening. Step 2, start the easing, whether they call it QE or some new fancy name. And step 3, the grand finale, print, print, and print some more. So that's where we are. The argument laid out here is pretty clear. The old system is breaking. The money printers are being warmed up as we speak. So after seeing all of this, the only question left is, what's your plan?